Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, on this wonderful Wednesday for another daily cryptocurrency and market update. If you are new around here, every single day at 1 p.m. UK time, we release an update just like this one to help you guys stay up to date with the latest and greatest things happening within the crypto space and also the broader markets. And that's exactly what we're going to be doing in this video. It is a very interesting time for macroeconomics. And there is a lot of uncertainty that the markets are not a fan of. Markets do not like uncertainty. It makes positioning harder. It means you have to take hedges. And we're seeing a lot of that play through. And unfortunately, crypto, which is really a higher beta play on risk, doesn't really know what to do with everything going on. Yesterday was nothing short of a volatile day for FX markets, for global sovereign bond markets, and everything in between. And we see a lot more pain, which I think has come from the fallout of Jerome Powell's speech last week in the sovereign bond markets generally, yields spiking up. The dollar gaining strength on the back end of all this. You've got to remember right now there is an alternative to markets, and that is cash. Cash at times is king. Generally, we do think cash is trash, and we think fiat systems have no other choice but to inflate. And that's why, Bitcoin and such things exist. But right now, crypto doesn't really know what to do. And I want to start the video off really with, this is going to be, I guess, quite a situation-focused video in regards to summing up the kind of state of play on the broader markets. But yesterday, I did post a thread on Twitter. Come and follow me at Real All In Crypto Guys, where I was just looking at some of what took place. So yesterday you had real volatile moves with the Japanese yen against the dollar. You also had yields across the boards spiking, which means that bonds are continuing to depreciate. You have pension funds, of course, which are stuffed full of bonds, most notably now treasuries, and they're moving out of junk bonds. Junk bonds are in real trouble. You had the JOLTS, the job openings market, open up really strong, better than expected. I think it was 9 million over 8 million predicted, which kind of gives more credence to the fact that the Fed can continue to do what they're doing for longer. Remember, you've got ADPs today, and then you've got non-farm on Friday, which is going to be a big one. It's going to be a big macro driver, certainly for the dollar and the bond markets, because it's going to give some data to anchor the markets off of moving forwards in regards to forward casting. You've got credit default swaps going through the roof, and you've got the likes of China continuing to dump treasuries. On top of that, you had total US debt adds 275 billion, added the total size of the last month's borrowing in one day. So there is a lot going on. And of course, with all of this, you're seeing the VIX, which is the volatility index for the S&P, spike. You're seeing stocks not liking the uncertainty and continuing to sell off. You're seeing, of course, the bond market continue to capitulate. Remember, here was Silicon Valley Bank, and we saw the government step in with and bail out Silicon Valley Bank with $400 billion. You also had, right now, we're at the exact same area where in the UK they stepped in for the gilts market and actually decided to start buying up gilts. You're now back there. And of course, the dollar's gaining strength on the back end of this. You can get 5%. Ray Dalio published a letter the other day talking about cash actually isn't trash, and potentially not in this environment. Of course, you're seeing further capitulation for the likes of gold and risk generally. We've also looked at real estate and real estate indexes. Some of them we actually did say had triggered, and we were looking at this the other day. Obviously, a very interest rate sensitive market. You've got a very negative headwind right now, and crypto, Bitcoin, unfortunately, is a deer in the headlights with everything going on. It's a lot to contend with. I'm sure many of you crypto investors, probably including myself, didn't really sign up for all this macro and economic kind of I don't know what you would call it, analysis, having to pay attention to it. But it's the situation we find ourselves in. And there's really two sides to the coin of Bitcoin. I had a good conversation with someone I respect yesterday, and he was saying, actually, Bitcoin's showing strength in relation to the other markets and how they're getting hit. Most markets right now are selling off on the back end of all the uncertainty. You've got this food chain of markets with bonds, certainly treasuries, which is the very financial system right at the top. And then crypto is just a plankton. And I don't really necessarily think it's showing strength. Maybe it is in the sense that it's not selling off like the other markets. I think it's just more that there's a real lack of interest. Crypto essentially is a higher beta play on risk. And nobody being uncertain with more certain markets like the US equity market is really going to want to play that game. Certainly, we know where crypto's going. We know where blockchain's going. We know that it's going to, distributed ledger technology is changing the entire world. We had news from the UK today that are launching a new sandbox in Q4 2024, or sorry, Q1 2024. We know where the crypto space is going. It's got a very bright future ahead of it. It's just getting to that point from a price point of view. And we've continued to keep everybody very vigilant on the possibilities of a head and shoulders here that's going to take you down here and that's going to fit in with a deeper A, B into a deeper C correction, and then you'll pick your feet up. We are bulls. We do absolutely assess that the crypto spring is well and truly here. However, you've got a lot to contend with. And this was a tweet from Robert Kiyosaki. The FDIC has over 725 US banks on death watch list. What does that mean? It means America does not need enemies. America has bankers. Our criminal bankers start with Jerome Powell of the Fed, Janet Yellen of the Treasury, and Jamie Dimon of our banks. God help us, USA does not need criminals. We hire them as our bankers. Wow. So what's he talking about with the... Robert Kiyosaki, I think, has some amazing points in what he says. And I think he's a very smart... Who am I to even speak on Robert Kiyosaki? But he has been calling for chaos for a long time. He's a big gold bug. We've actually looked at gold's performance divided by the money supply. And I feel almost a little bit sorry for the gold bugs because they're onto something, right? But in relative terms, when you account for the money supply, gold really hasn't done anything. Whereas something like Bitcoin has, and we actually think Michael Saylor's got a bit of a point. Now, we've not got this on log, so a little bit unfair for us to, let's show gold on log. Certainly gold is still down nominally from obviously the March 2020 spiller and the Prince-a-thon. So very interesting that. So what's he talking about with these 725 banks? Well, of course, it's all to do with the bond market. Banks hold their collateral, I think, primarily in bonds. And so do pensions. We showed this a minute ago. This is pension fund, treasury securities, assets. And the bond market just continues to get hit. Where are we? So we've got TLT, which is just a kind of ETF of bonds. You've got Japanese yields. Look at this. Let's get that off log. Going through the roof. Japanese government's already said that they're going to, the BOJ's already said they're going to step in. When does that happen for the US? This is an absolute breakout for the 10-year. You're pushing towards 5%. 2-year yields obviously follow, the Fed funds rate follows. This is still about where it should be, but doesn't mean that it can't actually spike up. And this is all why the dollar's getting a bid, right? First of all, it's a safety trade. You get 5% on it. Now, risk-free, the average return of the S&P is 9%. Remember, we are watching because the S&P will rally into a recession to the point of 2%. And I personally still believe that the S&P is going to go on and put in a new all-time high. Okay, we had Jamie Dimon come out and say that we're in 2007. We've got bond yields that haven't been seen since 2007. I think that's where Jamie Dimon's getting that comment. But we have looked at what the S&P did into 2007. timing is everything in markets. So many people can claim victory after, being wrong for a long period of time. But actually from 2007, the S&P into 2008 went on to put in a new all-time high. And we do think rates lag. We've got big data coming up. We've still got a projected target for upside for the stock market until invalidated. We've had many of our stocks make it safely home, but looking like they want to further pull back. When's the reversion in that? And a lot of that's going to depend on what, of course, the dollar does, and, of course, what the bond market does. And right now you have inflation fears. This is ultimately why you're seeing this spike in the VIX, which is a chart representation of uncertainty and people not liking that and positioning accordingly. So it's very interesting. And Bitcoin and crypto just don't really know what to do, I don't think. And the good thing is that they're holding whilst there's a really strong macro headwind and a kind of strong current against it, generally being a high beta play on risk. However, or I shouldn't say however, the good thing there is if your broader macro, the sun starts to come out, you could be setting up for this. And we've maintained our uncertainty. Whilst we're in this range, I really don't know, guys. I could see it going either way. Even still here, I don't like the fact that we pointed out this Head and Shoulders in my Patreon. On Sunday night, we perfectly hit that target, and now you've pulled back. This doesn't look too bad so far. Look at these buying wicks. This is a 3-hourly candle. Let's get off that. Even on a 4-hourly. And a daily, you are not really getting anything. But you've got buying wicks coming in here. So is this just a resistance into support flip? Maybe on the short term. The truthful answer is, guys, I don't want to play the game, even though we're long crypto. And we continue to accumulate. And actually, I think we're in a very good position. I think lower prices for me are almost welcomed, to be quite honest. It's not something that we're worried about. So either the 20K scenario or the break 28,500, hold it, and then try and run for 30 and above. Either one of those scenarios we're happy with. And I think that's a good place to be as an investor. If you guys want to find out what I'm buying and where, please do consider becoming a Patreon. But I'm unsure short term. Next couple of weeks, this sort of stuff. October was never going to be as simple as it started. Started off with an absolute bang. Let's see what happens. It's all really going to center, I think, largely around watching monetary policy and how the markets react to it. And you've got a very bearish swell, I think, right now in regards to the markets. However, we'll see. You've got to be very careful getting bearish at a point when the kind of moves already happened. So we've got a lot to watch. Bitcoin dominance climbing a little bit. Altcoins getting smashed, as they will always do when you've got bigger moves in bigger markets. Right now, it's looking like the futures market wants to close down. Have we got any forward guidance on some stocks? If you get rid of this draw, teaching some stage answer there. If you look at this, just seeing if we've got any divergences or anything. Yeah. I think this is going to turn around. Eventually. But we're just rambling on now, guys. So the main takeaway, I think, from this video is you've got a hell of a lot going on in the macro. Crypto, I don't really think knows what to do. I think it's a good thing that it's holding whilst others are capitulating. It's gaining that kind of relative strength against the stock market. And the better news would be if that kind of macro can brighten up and there can be a little bit less uncertainty introduced, actually crypto could do quite well. But it's all about watching, waiting, and anticipating the situation, and being patient. I also want to just talk very quickly. I know the XRP SEC's decision or submission to appeal the decision on XRP was denied. Again, that should have really moved the price, in my opinion. It didn't. And I think that's the nature of the beast and the nature of the market that we're in. On that note, guys, I'm going to love and leave you. We've got a lot to contend with. We've got a lot to watch out for. We'll keep you up to date every single day on this channel. And on that note, I'll see you all in the next one. Thanks for watching, guys. See you in the next.